Hello, everybody, and welcome to this week's podcast, the last one of April, for posting on April 30th, 2026. Hope everyone is doing well. My name is Miles Clark. I'm good. I'm joined here by good friend and colleague Joseph. How you doing, my friend?
I'm good. I mean, last time you brought up the Jets and the draft,
You
and
got your Jets colors on right now.
yeah,
How
well,
how'd
it's
they
not
do?
it's not a Jets polo, but I mean, this is like the best week of the year for a Jets fan. I mean,
No football, right? You can't
there's
lose.
no games, there's only hope,
Yeah.
which gets crushed in about 5 months or so. But we have a great off season every year.
Well, that's all it
You
takes, I
know what I mean?
suppose. Well, that's because it's great because you fire your head coach if they can make it past the second week. One other fun comment before we get started: we've got a whole new production setup. You all can't see it on camera, but hopefully we're better illuminated here.
Yeah.
Joseph and I walked into the podcast room we've got in the office, and we're blinded by about 4 or 5 different spotlights. So hopefully we don't go blind by the end of this. Let's put it that way. But it looks great.
Mhm.
Okay, moving on into the fun stuff, the market stuff. It was a relatively mixed day or mixed week since the last time that we have kind of last talked. Biggest gainer, crude oil, which we'll talk about a little bit more, with some continued unrest in the Middle East. Nasdaq Composite, S&P 500, some of the kind of larger tech focused areas continuing to do well, with semis leading the way, which again we'll talk about. And then towards the downside. Another commodity, gold, struggling a little bit over the last 7 days, as well as, interestingly enough, the equal weighted S&P 500. So we've seen a rotation into or back into some of the big tech focused areas, while some of the other areas, some of the other equal weighted names have struggled a little bit. But all in all, somewhat uneventful week.
Yeah, markets kind of slowed down, right? They had been we're talking about like what 10 consecutive positive days,
Right,
something about like semiconductor, that ETF was up 17 days in a row or something
right,
crazy like that. Um but obviously we get questions about, well, when's do I get back in right here?
right.
Or, yeah, it feels kind of bad if you if you didn't get back in a little bit earlier. I know we wrote a piece about going all in versus averaging in last week, which is something we're checking out. And then also the performance of the average bull market. So Trevor put in a pretty good piece this week talking about, market bull markets, and once they double, how much longer can they go?
Yes,
Um,
I'm sharing the screen now. Um,
yeah.
yes. Okay. Now it's screened. Go ahead.
But the the gist was, once it doubles, you still have, throughout history, there's still a couple periods where you still have a long way to go. Um, that's kind of maybe jumping the gun to the last part of the piece, talking about when the S&P 500 doubles. But I thought that was pretty interesting and a good talking point for people. Just because we've doubled in a bull market doesn't necessarily mean it's over.
Yeah, there's a lot of, I mean, Trevor, if you're listening, great job on this one. There's a lot of fun images. We'll just start on the first one. Obviously, since late 2022, moving up over 100% at this point. But obviously the question becomes, we have moved up 100% in a relatively what feels like quick manner,
Hmm.
right? We have, if we're looking at this chart, besides April of 2020, of 2024, really, or excuse me, 2025, really not much in the way of big, scary drawbacks. There's been a few here or there, but for the most part, it's felt pretty rapid that we've moved up over 100%. But just to kind of contextualize, this is one of my favorite images maybe that we've ever put on the platform, talking about the current bull market, that black line on the screen right now, versus other historical bull markets since 1949. And all that to say, right, you'll see some of them trail off, kind of as they end. But there's a handful of ones that go much longer and much higher, at least from a pure percentage perspective, than the one that we're in right now. And so all that to say, right, there still is room to run, even if you feel like you're kind of late in this go, right?
Yeah, for sure. And price will tell us if that's not the case. So where we've seen the S&P 500 doubled, continued length after that for the bull market, we're ranging from anywhere from, what, like a couple days. The one from the bull market from '02 to '07. Once that one doubled, it was pretty much over. Um, the one in from 2020 to early 2022, or really the first trading day of 2022, or first or second trading day of 2022, um, didn't have much more left in the tank. But you go back, you look at the 50s, still had another 2.5 years. You look at the 90s, you still had 7 years of
Right.
that bull market run. You look from 2011 to 2020, you still had eight over almost 9 years there. Um, you know, we could still have a long way to go.
Yeah, right. You say like on average, you've got roughly 3 years left, right? And on average, you almost double again, right?
Yeah.
I mean, you're up almost 80% in your historical, average after you double. So all that to say, right? When you're talking to your clients, obviously it feels like there's a lot going on. There's always going to be a lot going on. And what typically happens over time is markets go up, right? Of course, nobody likes it when they go down. But what typically happens is markets go up, especially when you're in a bull market, right? That's
Yeah.
the exact definition of a bull market. So, to help maybe put a pin in this specific conversation is, as we think about where we sit, as we are now back to positive for 2026, there still could be some left in the tank for broader domestic equities as we move further into the year.
Yeah, and another thing I will say too is, if you look at something like 2011 to 2020, right, you do have some scary moments in there. 2015 I know was not a comfortable year, even though I was in high school at that point. Um, end of 2018 was not comfortable.
I was in high
You had
school
the
at that point. Yeah.
you had the Christmas Eve massacre and
Yeah.
everything. So, even if this does continue, there's always going to be those scary moments moving forward. And this isn't to say like, oh, this bull market's going to go on another 5 years or not. We don't know that. I
Right.
think where this is really useful is saying, well, it can go quite a bit longer,
Right.
right? And you don't want to be missing out on that necessarily. Maybe you're nervous enough, or the clients are nervous enough, where you say, okay, maybe we don't go all in. We can average in, even though that's usually not the right thing to do. Um, but, you know, all of our indicators and things are saying things are pretty good right now.
Right.
Um, Now where things haven't been so hot is software.
Right.
We've talked about this quite a bit, and we figured we'd bring it up because, right, we won't go exactly through Microsoft today. But Microsoft has earnings this week,
Right.
and that's, the biggest software name. Um, And then we also have Palantir next week, which has also become a really big software name.
Right.
Um, that has started to firm up a little bit. If you look at something like IGV, which is one we've kind of highlighted over the last few weeks as a software representative, um, still in a negative trend on that 2 point chart and everything, which I think looks a bit cleaner than the default, but reversed up into a column of X's on its market RS chart. So we pointed out that support in the mid 70s. It seems like it's found, at
That
least
point again.
stopped the bleeding.
Yep.
Yeah. And then we kind of moved higher here. I do think this earnings season is going to be pretty important. We were talking about that earlier
Yep.
for some of these software names to maybe quell some of the worries that the market's having regarding, the AI impact in the software space.
Yeah, at least in the near term, right? I mean, you would think the markets, from how beaten down some of these software names are, markets are essentially pricing these things out like they're going out of business, like within the next couple quarters,
Yeah.
So yeah, it'll be important. Obviously, Microsoft is a really big name, and that's improved, but it hasn't really gained longer term technical favor. I think it's still a two for fiver on the platform right now, so it's still a name that we would classify as a technical sell. But yeah, I listened to the podcast, as we should,
Mhm.
but I listened to the podcast with you and Ian a few weeks ago, and I will admit you were pretty doggone close with your call of that support area in the mid to kind of slight upper ones 70s there for IGV. Like you said, we're going to have to watch Microsoft, but we will need to see further improvement from these areas before we classify this area as strong, particularly against other areas within technology, right? We've seen technology fall within the rankings and then subsequently rise back up. It's now second within our dollar sector rankings as we move into May, particularly spurred on by a further talk about bull market for semiconductors,
Yeah.
right? Semiconductors have done extremely well. You put the piece together about the RS relationship between the two. So maybe I'll invite you back on to talk about what you saw.
Yeah, and one thing I thought that was really interesting. So we looked at a RS chart of SOXX versus IGV. It goes back to about 2000.
Right,
Um, One thing we really noticed was from about '08 through 2021, it was just kind of ping ponging back and forth in this range, which kind of makes sense, right? Like you need semiconductors to run software programs.
right,
So as demand for software increased, demand for semiconductors also increased. Um, we started to see that break out to the upside, favoring semiconductors in the early 2020s, which makes sense. This is kind of when the AI narrative started. And then recently, the last, um, roughly a year now, semis have just taken off to the races and completely blown this thing out of the water. And hasn't looked back at all. Um, you know, and, we talk about IGV where he said, okay, well, it has some support here, it could bounce, but that's still relatively speaking, that hasn't done anything compared to semiconductors over
right.
that same period.
Yes, because where software has bounced, semis have bounced even harder, right?
Yeah.
And that's the relative side of things, right? That's why, 4 of the 5 attributes that we look at for stocks, and it's a similar proportion for funds, is on the relative side of things, right? In a vacuum, a stock or a fund can be moving higher, but it's also really important to contextualize software's bounce versus other areas of technology because we want to be in the ones that are earning more relative strength.
Yeah, and one of the reasons we keep kinda hitting on this relationship is you usually don't see this kind of dispersion within a single sector.
Right.
Um, I know John Lewis, our senior PM, has talked about it a couple of times that you almost never see this level of dispersion in a sector. It could be like the most he's seen ever.
Right.
Um, so momentum's worked really well within this sector, within technology,
Right.
right? Which is good to see. But it, sometimes these things where, you could have gone on this relative strength chart and assumed it would just ping pong back and forth for forever, right? Or you could have tried to bet against the mean reversion in this type of trade, bet against stocks, bet on software, and you would have just gotten, continue to get blown out of the water every
Right.
time you did that.
Yeah.
Um, so it's kind of one of those things where, yeah, software could bounce, but I'm not selling my semis and going and buying software at this point.
Oh, yeah. Okay. Well, that is, we talked about opening it up. What about, you talk about productive momentum environments. I'm going to share my screens. I silly stopped sharing it, but talking about the streakiness of momentum, we get calls in very, very frequently. And a lot of the conversations that we have are built around, hey, my client would like to trend follow, right?
Yeah.
But it feels like it's too streaky, right? As in, and define streaky as momentum is up, for 3 years straight, and then it's down for 3 years straight, or it underperforms for 3 years straight.
Mhm.
Same thing, it feels like it's underperforming by so much and then it's outperforming by so much, right? So it's this kind of interperiod experience we talk about that makes, that makes momentum uncomfortable, right? And so to help answer that question, we had done some research to kind of actually test, is that true, right? Because if it is, well, that's one thing, that's good to know. And if it's not, then maybe it's a bit of a misnomer about momentum. And so there was, as we scroll down to it here, I know it's a bit difficult to see on the screen. Actually, if you click on it, it comes up. This is a performance quilt that looks at 8 different factors. There is momentum, low volatility, high quality, value, equal weight core, growth, core, and then momentum in there as well. Maybe I missed one. Dividend. They're all on there. Representatives
Yeah.
for all of them are on there. The question then became, well, if momentum is streaky, our qualifier was as such. Do you see your momentum representative in the top 2 or bottom two for consecutive years, right? So the idea being is that if momentum representative is in the top two for consecutive years, more or at a higher click rate than your other representatives, then momentum is streaky,
Mhm.
right? And that isn't really the case, right? So momentum had about what was it there? It was 5 different episodes where it ranked within the top 2 or bottom 2 for at least 2 consecutive years. That's around 20% of the time, right? And that certainly seems like a lot, but other factors, right, have, if you look at any other factor, um, growth, value, whatever it may be, they have an episode, a streak episode roughly 4 times per factor. So momentum is a bit more streaky, right? But it's not comparatively that much more streaky than other factors that you always have within your investment portfolio. Does that make sense? Did I miss anything there?
No, that makes sense, and that kinda gets back to, I think, trends usually last a couple years,
Right.
you know?
Yeah.
Um, so, you may have growth work for 2 years, and then you get a 2022 that comes along and, sends it to the bottom,
Yep.
and then the next year, it's, like, kinda back in the top 2 or 3,
Right.
right? And momentum's gonna have its own momentum, right?
Yep.
If trends are steady, that's a really good backdrop for momentum. Inevitably, the trend's gonna change at some point, and that's not gonna be a great momentum environment. That doesn't mean momentum's gonna be either in the top 2 or the bottom 2 every year,
Right.
you know? You can get it in the middle of the, performance quilt. Hopefully, it's more towards the top
Right.
for us, right? But like you said, I mean, it's not any streakier, um, or at least significantly so, than other factors.
Exactly. And then furthering that idea, right? We talked about two possibilities. One, it's at the top or the bottom of the matrix more often, or not the matrix, of the performance
Cool.
spread more often, or it just feels like it because it's outperforming and underperforming
Mhm.
by a average margin that's bigger than other factors, right? So, what you'd expect to see is, momentum outperforming by a lot more, right? Or underperforming by a lot more. Well, to test this side of things, what we did was we looked at low volatility, value, and growth, right? So just 3 other ones. We took a smaller list this time and we said low volatility, value, and growth when you are on a streak event, right? So when we are outperforming for 2 or 3 years straight, on average, how much are we outperforming the benchmark, which is core, right? So again, a bigger value here means you're outperforming by more or less. Now, I will admit here, momentum, but our momentum representative is the widest, just over 20%, but it's roughly on par with value and slightly ahead of growth. Low volatility, you'd expect to be lower.
Mhm.
All that to say, right, you've got your factors, your other factors outside of momentum. When they are on these streak events, they outperform or underperform by just the same amount as momentum. So that kind of quells that issue too, right? Like, yes, sure, you see outperformance, but it's not anything abnormal than what you'd get for other factors.
Yeah, and that's also gets back to, like, how our momentum is calibrated. It's like when we talk about momentum or we talk about value, somebody may have a different definition of value,
Right.
compared to somebody else, and the same thing for momentum. I mean, I doubt a lot of people are using, point figure relative strength charts to
That's
judge
fair.
momentum,
Yes.
right? So that's one thing to also keep in mind, when we're talking about momentum, because momentum can kind of get a bad name sometimes, but
Yes.
a lot of it is, it's shorter term momentum, leverage type of momentum, where that's not really our path,
Right.
our focus.
Anyways, that was hopefully, I mean, this is going to be something that we're going to put out. There's 3 pitfalls that we're looking at. There's the streakiness of momentum. There is this idea that momentum only chases winners, right? It buys high and sells low. And then there's a tax inefficiency aspect of momentum that people think. So we're going to essentially be releasing those in a series over the next couple of weeks. I'm sure we'll probably use them as topics in future podcasts as well.
Mhm.
But be on the lookout for that on the platform. I think we got time for one more. Do you want to do the crude stuff, or do you want to do that other piece of research on the kind of cover call stuff? What do you want to do?
Well, I the cover call piece, I think if people want to go read that in the report, go read that in the report.
That's a good
I
piece.
yeah, thank
You wrote it, so I'll
you.
get it to you.
I think crude oil is probably a little bit more prescient, just given that we've seen it hit 107 today. Um, some interesting things too. I mean, other than the price going back up, the Iran conflict, we're kind of like in this. Well, I don't want to use quagmire because then everyone's going to associate that with Vietnam. That was
Right,
like the common phrase for Vietnam, but I'm not drawing any comparisons there. But right now we're kind of like, is it a ceasefire? Is it not?
right.
We're waiting for that to get figured out, right? Um, the the other thing that's interesting too is the UAE left OPEC.
Yes,
That was really interesting news. Um, so maybe shorter term that increases the volatility in the space, but now they're not constrained to OPEC quotas.
right.
So maybe they're pumping out more oil than they otherwise would be.
Yep.
And maybe that's the first domino to fall. I mean, who knows? There could be other ones that are like, well, I want to pump as much oil as I want to. Now that the US is a net exporter instead of importer of oil, it's not as much of a powerful institution anymore. Now that the US can generate quite a bit more supply.
It's
So
interesting as you keep
I'm kind of like going through the macro things in my head right now, and it's interesting.
it's interesting that you say it seems like every time, there's like a pretty valid argument for any of these like energy export or major events. I mean, I remember having a very similar type of conversation when we saw the whole Venezuela thing happen
Mhm.
earlier. It was like, okay, well, now that the US has more influence on, Venezuela, is that going to increase supply or is it actually just going to increased volatility in the space. It is so it's interesting how all this stuff you can make a pretty good argument for either the supply or the demand paradigm in the short term. Let's put it that way.
Yeah, yeah. I mean, I think like for in Venezuela's case, I mean, I think that's going to be long term. That's added supply
Correct.
to the
Correct.
market, right?
Yeah. Yeah. Yeah.
Um, then UAE leaving. I mean, they may not be able to ramp up production right away,
Right.
right? But you would think that with leaving OPEC, their goal is probably we want to get as much oil out there as we want to,
Right.
right? Um, depending on price. I
Yeah.
mean,
Especially while it's F-107.
yeah, exactly, exactly.
Yeah.
Um,
Speaking of, right, we've got the chart pulled up.
yeah, we got the chart pulled up. Um, we've been looking at the 2 point chart recently, just because that's been a bit cleaner to look at. The 1 point's kind of all over the place. So up to 107. So we're in our positive trend today. This chart isn't updated. Our commodity prices mostly update after the close. But interesting, this is a level bounce right off 80, and this is a level that we had kind of talked about over the last several weeks, because that was that initial pullback from that 120 spike high was right at 78, kind of bounced off that area, and are now kind of pushing back up to the top of the range. So it seems like we have a really established, I mean, it's a wide range between about 80 and we'll call it around 110. Those forays into like 116, 118 were so brief.
Right.
Um, I kind of I'll tone it down a little bit. So if we start to see over 110, then I think you start to get worried. And I wouldn't be surprised if the market started to also get worried if we were above 110, 120, where we've seen it. It's the other interesting is the market's shaking it off pretty well so far.
Right. Oh yeah. I mean, I remember a couple of weeks ago it was like oil up, markets down. Now you're kind of like, well, oil is also up and markets are also kind of up. It's like, well, this is a little bit different, right? Maybe a different view than what we
Yeah.
got at the beginning of this. Also, from a point figure perspective, too, I do want to highlight, right, that pullback to let's just call it 80, right? That was also a significant point of resistance as I run back over the last couple of years.
Mm.
That 80 point was a pretty significant topping point at the top of this wide range that we would have said was there really throughout 2023 into late 2025. So from again a pure technical point, you see some support coming in around old resistance. This is like clockwork, right?
Yeah. Yeah.
So
It's what we usually see, or often see. Uh,
you got anything left on the energy front?
no, I mean the thing I've been saying is just watch the levels,
Yeah,
because everything else you can't really. It's much harder to price or try to forecast.
yep.
So just keep an eye on the levels, especially when it comes to crude. Um, but that's pretty much it. And you know, by the time this comes out, Microsoft will have reported earnings. Good luck to Microsoft and the software group as a whole. That they need it.
Yeah, you've got Mike. It's a great day. You've got Microsoft, Amazon. Well, it could be great. Could be also. We're gonna go one way, right? We've got Apple tomorrow, Microsoft, Amazon, Google this afternoon. Oracle I think is also tomorrow. Like you said, you got Palantir. So you got some real heavy hitters. I don't think that we'll be out of stuff to talk about next week either. So, anyways, we appreciate your time. I hope everyone has a wonderful and safe week, and we will be back again next time to touch on any updates.